Good afternoon, everyone, all traders at all levels, and welcome to today's webinar presentation with regards to the Inside Technician's new webinar, Customer Support. We offer this webinar on a weekly basis to those who have previously purchased any of our Expert Market Timing or S&P mini course material, or anyone who will in the future from this moment on. Therefore, all are welcome every week, every Wednesday at 4:30 p.m. Eastern Standard Time to this free educational webinar where we have now officially established the Traders Alliance. This is a major breakthrough in analyzing what really needs to be addressed to help people become more profitable traders. It was clear that the industry was missing something very important. That was direct contact interaction. The interactivity between what the educational source is referring to and the actual clients who have come through the door and paid for course material here. So this interactivity will now provide, again, all Inside Technicians to be able to ask questions throughout the week, and those questions will be addressed within this webinar room to help you get them answered, and especially, and more than that, for the continued educational side of your trading education, because it's not just the question that you ask, it's obviously the question that someone else asks that maybe one person never thought of. So this is a win-win for everyone. So we have officially established a Traders Alliance for like-minded people who, from basically a very isolated business, can now interact with others to be able to move forward in a very professional, ethical, and above-board manner. My name is Jeff Killian. I am the founder and the chief market strategist for the Inside Technician. Today we're going to run through quite a bit of information. And as always, my goal here is to deliver over actionable intelligence that you can use right away to become that better trader. Whether you're an expert market timer, trading mutual funds, ETFs, stocks, anything of that nature, or on this side of the fence where I'm personally trading the S&P 500 mini futures in my primary market here in real time. So now that that's finished, let's get into exactly what we need to talk about today. And we have a question from Bill Z, and I know this person because he's recently purchased an E-mini course. And he wants to know, please review how you set up your end-of-day levels. And so to get into the inner mechanics of exactly how to do this requires many different market conditions, many different moves from the market bottoming out, say, here at this area and then moving up, as compared to prices falling off and turning back around here, the setups before the turning points, the setup before the turning point, and here the setup before the turning point, in this case, to the downside. Now, what we do know is that prices that have been established on the way up are clearly resistance levels that are broken through, and in this case, breaking into new market highs, that when prices turn back around can and are used very frequently to establish support levels on the way down that become, on a daily basis, longer-term price profit targets. In this case, we'll blow this chart up quite a bit here. You are viewing an end-of-day chart updated in real time of ES, near contract month, March 2015. Now, at this juncture here, we have the new market high area. We have prices that have officially established a net neutral, aka consolidation area here between this red level and the first white level to the downside. As I pull this down and blow it up more, it becomes easier to see. We're talking about between here and here. And again, here at this level with an eclipse in red. So as these prices have traded up, they have laid out clear openings, in this case here, 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 and again here, and again here at this level, where if and when prices decide to turn back around, as the indicators on an end-of-day basis will lead the prices, although they're moving market net neutral, we have clear targets to the downside that we can count on for prices on a daily basis to get magnetized to. Now, the smart money, the largest institutions, the largest, deepest pockets within the worldwide now marketplace, with excellent liquidity within this marketplace being available, have clearly orchestrated the up move and have clearly ahead of time, this is the key scenario here, ahead of time laid out in advance what they're going to do. The question is, how good can we be at choosing these levels and then use them as longer-term targets to the downside to know when and where to get out if you're trading in real time at or near those levels where real-time prices may find significant support and halt and then regain momentum to the downside in the case of a strong correction to the downside on a daily basis and continue to trade short in real time. So knowing where these levels are on the way up, as identified by, in this case, a series of opens, okay, it's clear that we have levels established ahead of time. Now, as we move into the future, we can see that prices close almost exactly at this level right here, and a probe to the downside indicating the higher probabilities of future directional price movement clearly say that in time, maybe even the next session, prices can get to here and here because the probe has already laid out the path for the prices to trade down to. If everybody understands what I have explained so far, then we'll move on and we'll keep demonstrating the rest of this move that's currently taking place in the U.S. markets so we can see exactly how the price action itself in isolation is clearly something that needs to be learned and exactly how to read it in conjunction with the levels that are laid out as prices have traded up. Prices, in this case, are now contained, the open right near the exact close within the channel between this level and this level here. We'll get to those numeric values shortly enough. And then all the way down and halting on a single day's session, right? And that session was only on 3/6. Now 3/6, for those of you who were trading, was last Friday. The uploaded YouTube video that touches on institutional trading, which we will be getting into later on in this year and training these institutions how to trade this methodology, here clearly uploaded a few days ago, showed the very first move that took place to get through this floor level and again here and out on the target right about here, if not here, even trading down further in real time to get the very first major move in real time in play exactly as it happened. Now, I won't go into too much detail about that video, but what I can say is that that is one of the greatest videos that we have ever been able, or have had the fortune to post to YouTube, our YouTube channel and the company blog on the InsideTechnician.com website. And the reason why is because I felt that the prices were definitely going to trade down in that session because of all the pent-up selling pressure on the daily charts. However, prices did trade up, and then they turned back around and followed through with the actual floor level that I had laid out being traded through for the very first move to be short. Now, after this was completed, and price is halted right about at this open on a closing basis once again. Price is stagnated here, and another major move right here on the most recent previous session here, right down to a level that I had laid out as established by this pivot point low, 1, 2, 3 bars. Chose this particular day, a 2/9/2015, on a closing price at 2,042.50 in order to be the selected data point that prices should trade down to. I mean, outside of these as well, this is the major area for prices to halt at, and rightfully so, because this is the actual pivot point. Two levels very close, and this is the hammered out close that needed to be selected, very close to this bar as well. So now we have prices that are once again at 20.4275 in real time as we speak right now at 4:44 p.m. Eastern Standard on 3/11/2015. That's today, March 11, 2015, right there at 20.42.50. That's a little more than uncanny, you have to admit. But this is the way a properly trained trader can identify with these levels to know when and where to really be looking at, in this case, in this market, and within the last week's time, look to be trading short, load up, trade a higher amount of contracts versus when the market is thin, right? And things are about to change direction, and know that you're on the right side of the market in real time. Now, this is all about expert market timing with the daily levels included as an adjunct. They are both intertwined. They are both equally as important as the other. Looking at the price action in isolation, all the levels clearly laid out in advance here, as you can see, like I had, provides the type of education that a trader really needs. Now, outside of that, if you look real close, you can see that the equity side had some volume too. This is the actual ES end of day chart that I analyze before I trade anything. And as you can see on this day right here, there was a spike that went above the 21 period average daily volume here. It doesn't seem like a lot, but if you look at it in isolation, okay, it is above. Volume dries up, prices move sideways, net neutral, and then the volume comes in on the day to start everything off right here. Then again, look at the volume on this day right here on a down close, confirming that it is in fact selling pressure. And then again here as well, there we are. And then here's today's session's action. Again, trading now marked to the market at 20.4275, and a level that I had later is 20.4250. It is extremely important to understand how to become an expert market timer, because this is where everything begins. This knowledge, once learned properly, turned into actionable intelligence, gives you the ability to walk into the real-time charts and the 15-minute charts and the 1-minute chart and say, okay, I know what the overall tide of the U.S. marketplace is. I know that we are market net neutral. So if I'm going to trade anything, long or short, it better be a darn good setup, and it better have a decent target to the downside based on a 15-minute level. Not exactly that I have the same way I've chosen these, but similar to, right, that I can get to in a hurry. And I have to understand and be an acceptance of the fact that when the market is tight, I might only pick up 1.5 points, 2 points a day. And I have to live with that, because if you're chasing a trade, then the open risk becomes so much greater than under any other circumstances. You do not want to be over trading when the market is tight, because the opportunities are thin, just like the market is. So let's be prudent. Let's be wise. Let's be sharp. Let's stay focused on exactly what is in front of us every single day. Now, obviously, when the market sells off here, and you know that you're right, volumes come in, start the entire thing off, and you're looking at a few other indicators. We don't have time to go into all of them, but I'll take a look at the Chaikin money flow here, which I have a Fibonacci application and an extension, okay, added on to. This case, in this particular scenario, as we look at drawing a trend line from here up to here, okay. Now, in this case, it's obvious that we have a small interruption of this open price and this open price here. But it's nothing that is, a few points above, no more than 5 points greater above than the trend line. So it's not an official free and clear trend line. But what I want you to see is the level of strength that the Chaikin money flow indicator has here as compared to these prices here. And then again, as prices traded up, way down, and then up again here, the peak that's established that's associated with this price area and this trend line extended out here into the hard right edge is clearly lower than this. So although the price is traded back up and the indicator traded back up as well to confirm the up move, after we get through all this insane amount of program trading here, we have almost an official negative divergence with a fair degree of strength to the downside. And here's the killer. The trendline violation right here is the ultimate confirmation, the earliest confirmation that you receive, that prices should get through this floor level at a 0% retracement to the upside on the Fibonacci original application that existed from here to here. The 0% floor level is traded through, and there's the big day down. The floor level on the actual action of the indicator itself is traded through, confirming that on this session here, more momentum continues to the downside to confirm that the move is backed once again by large institutions. So the early violation here confirms the break of the floor. Clear to be short, load up on the contracts, ETFs, to be short, anything you want from a market timing aspect. Now for my money, it's all about real time because I know that I can make a lot more trading the S&P 500 mini futures than I can ever make trading any ETFs, any funds, any sector funds, pretty much anything. So this is why I personally trade this market exclusively. And for those of you who trade other instruments, once again, you can trade anything that your heart desires to trade. But the most important thing is the foundational aspect of trading and learning how to become an expert market timer so that you can do this successfully. What you don't want to do is begin to trade without enough knowledge. People come into the business. I've seen this many, many times. They get, a few months behind them and they say, okay, I'm going to start trading real money. And they haven't even paper traded. And this leads to the higher probabilities of them losing money, right? Maybe even blowing out their account and not having the chance because they never gave themselves the chance to stay in the business as a professional does. So once again, let's be prudent, let's be wise, let's stay sharp, and let's get properly educated. So now at this point, getting back to the daily chart here for just a minute. Okay. The question would become, what's the next level to the downside? Just so we can finish this up the right way. Now what I know is that I have a little bit of noise that's between here and here. So if I'm going to consider trading short anything, right? Maybe I'm flat today. If I'm in a few ETFs, I'm waiting to see if we're going to get a continuation move to the downside. I know that with what I'm looking at, I really need to get through the lowest of this open or close area, and it happens to be this bar. So for me to trade short again, I'm looking to get through here, and I need a 15-minute high probability trade set up to the downside. The next real support level after you get through here is right here. It's laid out by this open. And then from there, it's moved down to right here because we have two closes right here. So this is exactly what a person will choose from a daily perspective for targets to the downside on the next possible leg that may come through. The probe is already here, so it's possible. We have a large range finder bar on a daily basis, but there's still some room to go on the end of the indicator. So right now, the open price is 2036.50 from 128. And then the closing price here from 2/4/2015, 17:15 hours becomes 2030 flat. That's 2030 flat. That should pretty well cover the basics. Now, these are just the basics behind how to choose the daily levels. Okay, that training, that highest level of training to decide, what about the areas that are in between them? How does this relate to the 15-minute charts? How do I know whether it's an open or a close? How do I know if I should choose the right side of the pivot point, high or low? How do I know this? That's all part of the executive mentorship program training. And I don't mean to, divert the attention from one thing to another, but that is some of the highest level of training that's available from myself personally here, working with me. So it's something that is a much larger subject matter that we only have enough time to basically touch on today. But this was the basic question. This is more than a basic series of answers. So let this serve as not just answers, to a client's question, but as obviously real trading education and continuing trading education. This is just one example of what we will accomplish on a weekly basis. Okay, so now that we have that covered, I want to switch over into the real-time charts here and talk about, here we are. Okay, give me 1 second here while I adjust this. No. Okay. Okay, for the Inside Technicians Administrator, there is a message within the chat area for you. Thank you. Please respond that you have received that. It'd be appreciated. Okay, so on the real-time charts here, the most recent session that I had identified, other than the YouTube trade that's posted, because you'll get a chance to go back and take a look at that on your own, is where we had an opportunity to be long or short. I never took the long move that came in, as you'll see on my 1-minute chart here, that we were looking for a preferred entry at about 2070. Now, the time and date stamp on that is 7:48 a.m. on March 9th, 2015. That's the 9th, not long ago. And so prices did trade up. The preferred entry was absolutely selected at the right place. hit, traded through. There could have been a profit here. Prices traded up. Okay, turned back around. A lot of program trading here. Look at the difference in volatility from this pattern to here, right? And here we have a situation where program trading comes in again, right here, greater volatility, and finally prices turn back around as the day moves on, right? Session finishes up, and then prices finally through the overnight session turn back around. Large volume comes in, the 10th here, and we get through. What was once resistance was found as support. So resistance changes to support, and prices are traded through to the downside for the very first official confirmation of getting through superior support to the downside to be short. There was another opportunity, obviously, right here as well, based on lower volatility, that could have been taken when prices got right through this level here with a large amount of volume that had come in to push the prices through the floor. So this is what we're referring to here when we talk about the overall market bias. This trading methodology that I designed well over now 23 years ago was specifically engineered to employ the greatest positional advantage that any trader can have. And without incorporating the market timing into real-time trading, it's really, really, really difficult to get above 50, 60, 75% a year. I mean, we have people who've come through here that are doing, you know, three times that. And they studied with me. They began where anybody should begin, with course material, and then moved forward. So I want to take a better look at this setup, and I want to show you what I had laid out before anything ever took off again to the downside. The chart you'll see here is exactly what I had laid out ahead of time. And so as you look at the downside preferred entry at 2066 and 2059.75 right here, okay, this is your first target, 64.75, 62.25, 61.50, 20.59, and 25. Now these are all selected from past data points. Similar but not the same as the end of day chart selection process we just went through. So here we have a 1 minute chart, which we're honing it down, going from the micro to the macro, and all these levels are laid out well in advance. So these can be used as price profit targets to the downside as prices may continue to move down. There are many levels laid out to the downside in this case because I'm expecting the market to sell off. I know it's going to sell off. I can't tell you exactly when, the exact moment, but I know for fact that it will sell off, and I'll be there. I will be there to get it if it turns out to be a high probability trade to the downside. And I will profit from it because that's what I have worked for every single day for the past 2 weeks, and it's mine. It's mine because I worked for it. I studied harder. I put my head down. And therefore, if anybody deserves to make that money, it's me. And I will take it. And if somebody's on the other side of those trades, well, so be it. Now, taking a look at the 15-minute charts here for just a minute, in and around the same area, I want to show you how I'm looking at the, in this case, the chicken money flow indicator, 21 period, look back. And I have the resistance levels laid out to the upside in case prices trade up after the major sell-off, right? And now we have beautiful low volatility chart pattern, great as compared to this higher volatility here. The first move was the highest, had the highest probability of making the most amount of money in a short period of time. And then again, the second leg here. And after that, things got nuts. Here, things calmed down from here to here. And we're looking for a breakout. The breakout came first, as we talked about earlier, to the upside, right? But now, since my bias was and remained to the downside. These are all the levels that I have laid out to the downside, including maybe something that's very important right here, because I know if the market trades down and it's the day that I've been waiting for, then I obviously have to take advantage of the major sell-off, because I might be trading 3, 4, 5 times in a day. This is the way. This is how thorough a true professional has to be. So you're not leaving anything to chance. And this is only, a fraction of the information. But the way that the information is delivered over here, and these courses are foundational. I'm going to tell you right now that they are foundational. It's impossible to teach all this information in anywhere from 4 to 6 hours. Nobody can do that. In the EMP, it's an entirely different story. No stones are left unturned. But the point is that learning how to select these levels, as you did in the daily charts, allows you to be able to determine when and where to trade and really put your money to risk. So if you take a look at the levels that I had laid out to the downside, and we move out into the hard right edge, the price is traded up, now they're sideways, and here we are, getting through the original support level that was laid out at 2066.25 after the first move that took off right here, right, that I just showed you on a 1-minute chart, and now we're through here and we're good to go. Now in this case, the very first move at this point right here, the check and money flow was already down. So the smart money had decided that this was going to be it. So this was a clear move that could have been made, and a trend line was drawn here. What I want you to see is exactly how I did what I did long before this move ever began. So you can see exactly how it started off. This was a viable move to trade. A lot of traders did trade it, and we got through here. And now look at first level hit, 62.75. Second level hit right here, price stop at 59.25. A failed try to get down here to 54.25. Prices trade up. They find the previous support level that was established by the prices on a down move as resistance. Very simple, straightforward, correct application of technical analysis. They move back down and they find the floor established once again here at the 54.25 level. And I'll fly on the last two here. And here's the probe to get through it. Price is back up. And here is your next trading opportunity coming into play. Okay, so looking at the reality of what we have in front of us, the moves that are first out of the box are the best possible opportunity. Right here is where it all started. That's where you should have been short. All the way down to here. Here's your second leg. Here's your third leg. Here's a fourth leg, and a failed try to get down to 54.25. After that, things changed. Why? Because the move was overextended. How do you know? Because you've been educated. Trading is a language. I speak fluent Spanish, and there's, I'm sure, many people in this room, and we have a lot in here today, a lot of high-level professionals right down to the beginners, who speak other languages. Understanding that it's a language that has to be learned so it can be interpreted, so it can be understood, right? And you can respond and communicate back correctly. We have to pay special attention as to exactly who we choose to learn this language. This language is the correct application of technical analysis. This is the type of language that people need to learn in order to use this as a foundational springboard to keep moving in the right direction. When I first started to study a foreign language, I studied hard, a couple hours every single night with a very good friend of mine, and after that I found the best teacher I could in Santiago, Dominican Republic, at Pucamaima, respected university. If not the best, the second best in the entire country. And I went there 2 days a week, and I recorded all the sessions, and then I studied for 4 hours a day for 4 months. And it wasn't easy, but I knew that I would learn that language, and I did. This is no different, people. No different at all. Learning the right way from the beginning is always the best. Unlearning what you have been taught that is wrong takes a lot of, how do I say, self-admission, for lack of a better verb that I can't think of right now. It takes a lot of self-analysis, a lot of self-admission that maybe what you were taught, because nobody ever showed you the correct way, right, was wrong, and then you have to relearn it. If your desire is to learn how to trade, then that's no problem. We have to assume responsibility that maybe others who have taught us have not exactly been the most above board people. Because most people who are teachers, most people who are supposed gurus, they don't even trade. We know this because we know who's out there. For those of you who are new to us, again, we've got well over 100 trades that were recorded in real time. It's the undeniable truth. You can't negate that. You can't curve fit that. You can't twist it. You can't fabricate it, is the word I'm looking for. So these are the types of things that traders need to understand, that sometimes we run across information that is not right. And just because it hasn't been taught to us the right way, right, because somebody didn't know how to show you the way, it doesn't mean that we have to be taken back by it. It means that it's just something that happened and we need to move on. And before we get close to, finishing this up here, I just want to let everyone know that in the chat area right now are links to the Exit Market Timing course and the S&P 500 E-mini Trader Trading course. These courses have been around for a long time. They're timeless. They will not cancel themselves out. And they are probably some of the best foundational courses that you're going to find anywhere. And today at a special price, you can click through and get them so that you can begin with the right information, the right foundation you need in order to move forward. There is a special price in there for today's webinar attendees. So for those of you that have a serious interest in learning, both the Exit Market Timing course link and the E-mini course link are there waiting for you in the chat area. We have a few more questions that we have enough time to get to. And one is, I want the volume indicator similar as yours. How do I set that up? How can I do that? So if we're looking at the volume chart here, let's use the 1 minute chart. Okay. This is a very simple setup here, people. Here in this case, you just have the price action above, a simple 1 minute chart with nothing in the subgraph below, and you'll fly in the standard volume indicator. That's it. Now, after this is done, in most any trading analysis platform, you should be able to go in and add different things into the subgraph to combine it with this volume indicator. So I'm going to show you my 21 period average, smooth, simple moving average. In fact, right here, it's just a running total, 21 period average daily volume, which needs actually 22 periods in order to calculate the most recent bar's action. And it is based on the volume for ES315 on a 1 minute chart here. And then I have a simple moving average volume overlaid right on top of that. So you can click a simple moving average from any one of these. Usually every program has a drop-down menu where you can add to this area and then click OK. If there is any tweaking that needs to be done, you can do it right there. So getting through that, we take a look at what has been produced in the form of spikes that are above or below the 21 period average. And in this case, we have two substantial spikes right here, where this is obviously some of the biggest institutions trading right here. In this case, it's 1601 on 3.5 for 17,862 contracts. And then at 1600 hours right here, 3.5 for 28,493 contracts. So as we look at the price action and what is available for us to identify high probability market turning points, and then the correct areas to be trading in real time. The floor level is established. We move into the future, and then it's always the same, people. Large volume comes in to get through, follow through, and drive us down to targets that we have laid out in advance here again on the 1 minute chart. Nothing changes. It's the institutional volume that we need, and that's exactly how we get the ultimate confirmation when everything else is fired, a sell signal in this case, to be short. Okay, let's get back to this daily chart for just a minute here. And this I have included in my 15-minute chart real-time workspace as well, so I can see this action. I already know where the levels are. I have them in my head because I have them ingrained in there from what I've laid out on my entire end-of-day workspace. And the last question we have time for is, we have many people who come to us who've tried to trade forex before and traded stocks. I traded stocks. I tried forex. Too difficult for a singular person to do it. Stocks, yes, but it requires a lot more work, and you have the overnight risk of holding a stock. And if the market gaps down, and if there's a bad news report, you can lose your tail real quick. Trading the E-mini futures, my recommendation is go with this because you can be in and you can be out the same day and sleep at night and still live a balanced life, which is what most traders cannot do. So another reason why I designed this methodology exactly the way I did. And he's talking about gaps up, gaps down in the futures market. Well, that's not the case in real time with everything that we're looking at here. If they do gap up or do gap down, most of the time, that is a blow off to the upside or a blow off to the downside, or possibly the initiation of the move to the downside like we just saw in the 1 minute chart, but we had no gap in that case to the downside. So this fellow has obviously been somewhat misinformed. I think that the person who's talking to this fellow probably wants him to open up a forex or a stock account instead of trading the E-mini futures. That seems pretty obvious to me, but I'm not surprised. Right. My problem with stock trading is the volume of choice, and I need fewer markets to focus on. Exactly. So he's now asking, can he trade this market with $6,500? He was, yeah, that's about a minimum. $5,000, you can come in and trade this market. So $5,000 and up is possible. Now, we can't officially recommend, somebody to trade through, to clear through, broker, dealer, because that is a conflict of interest. But what I can say is that there are many out there who offer as low as $400 margins to control a single contract. That wasn't the way it was, 10 years ago, 5 years ago, even. Things have changed dramatically because they want the business. The liquidity is here in this market. The money's really here, and again, no overnight risk. So, last question is that we have time to cover in this webinar. What sessions can I trade this market? Well, For me, the best is either the overnight session that really starts to kick in at 3 a.m. Eastern Standard, because the overnight session is really controlled by the European region, where a lot more liquidity starts to come in, a lot more participation, and prices start to move. So a lot of the trading channels that you see established on the 15-minute charts, if you go back, and obviously the 1-minute chart, are of very low volatility up until that session opens. And then most of the time, when it does, or shortly thereafter, because of the increased participation, the prices will continue to move now in the anticipated direction, obviously with the 15-minute indicator setup, with the market behind it, like we've seen in the last few overnight sessions, prices moving down. So there's an opportunity there to clearly profit. And then right up, I'd say up until about 8:30, possibly even 8:45 max, something like that usually, where there is more than enough opportunity to make the lion's share of the money and then forget it, close it out, don't get greedy. And if it's there, and if it was for you and you got it, great. And if it wasn't, there's always another trading opportunity, but there's not always more money. Wow, we have covered an incredible amount of information. A lot of the questions were related to how do we lay out these levels? How do we do this? How do we do this? And so this is why a large portion of this was dedicated to that, and then we went right into the real-time charts. So once again, what we have clearly done here today, I believe, and the people that we took a census within who have been long-time inside technicians, has officially developed something that you're only going to get here at this company. The questions answered and the continuing education is something that, once again, anyone who comes through the door and purchases any of our courses, any of our course material, and again, the links are in the chat area, gets absolutely free 4 times a month, and we go with that. Now, this webinar has been recorded, and for all the registrants, not just the people who attended today, it will be uploaded to our servers, and it will be available for you tomorrow to study however many times you want, absolutely free. The only thing we ask is that you don't share the information, please. It's only for us. So, for those of you who have not become inside technicians, we hope that this inspires you to come on board with us, and let us continue to show you how we will continually work with you to help you become a more profitable trader or investor. This is Jeff Killian, a Chief Market Strategist for the Inside Technician. It's been my absolute pleasure to present this webinar to the world today. It is now 5:21 p.m. Eastern Standard on March 11th, 2015, and we'll see you again on the next profitable trade. I'm going to leave this webinar room open for about 10 minutes so that people can click through to these links if they want to, and we'll be cutting the recording right now. All the best to all of you on the rest of your trading week.